Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and as I speak to all of you all this Monday morning at around about 10:30, a little bit of softish move beginning on the markets this Monday morning, largely driven by the news flows which have been focusing on the US tariff related news flows as announced by the President of America, Mr. Donald Trump. He's also made one more statement of incremental 10% tariff on all those anti-America BRIC nations with respect to the policies that they will possibly have in the future, and that is one of the reasons why we've seen a very softish beginning in our markets. 9th July, and then of course letters being sent out later during the course of the day from America to the rest of the world with respect to tariff, and of course the implementation in the month of August of those tariffs. So it's a wait and watch situation as far as India is concerned. The government has given out a statement that there is a mini tariff trade deal in works, which has left out agriculture and dairy sector because of the sensitivity in terms of dependency of large part of our population on the agri and dairy sector. Remains to be seen how, when, and in which format this tariff-related trade deal is signed, sealed, and delivered. I think market could possibly breathe a little bit of fresh air once this is signed, sealed, and delivered. Till that time, I think choppiness and volatility will follow. Last week, we had given out a range on the markets. On the lower side, 25,400 to 25,400. This morning, we are trading below the lower end of 25,400. 25,400, near about those levels we are trading. We've seen a breach below that, and then we have recovered to a certain extent. But more importantly, I think it's going to be choppy, volatile as we go into the trade days for this week and of course for next week. Earnings which will see a curtain raiser for the first quarter this new financial year from 10th of July onwards will give some kind of direction to the markets is what we believe, friends. And it will be stock specific, sector specific. As and when the earnings start unfolding, markets will possibly gauge the mood and the strength thereafter. But till such time, I think choppiness, volatility will follow. If we have to give you a range on the Nifty spot, lower side, higher side, then 25,200 to 25,400, 25,200 to 25,300 on the lower side. And on the higher side, 25,700 to 25,800 is the range. It won't be very easy, friends, given the sell side number from the foreign institutional investors last week. Domestic institutionals continued to buy as far as opportunities are concerned on sector and stock specific ideas. India VIX has cooled out, friend, to quite an extent. This morning, India VIX stood at about 12.60 with an uptick of about 2.20%. Lower India VIX means lower volatility, lower choppiness. That means that could add a little bit of stability to the market. Crude oil has given a downward move after the statement made by the OPEC plus nations of increasing the crude oil output. As I speak to all of you all this Monday morning, Brent is trading at about $68.04 to a barrel. NYMEX is trading at about $66.29 to a barrel. Expectation is that lower trajectory on crude oil on both Brent and NYMEX could be witnessed given the increase in output and lower consumption. That would support the market. Rupee has seen again a little bit of weakness against the dollar. Currently, $1 stands at about 85.72 rupees to $1 with a weakness of 0.32 paise. Expect the rupee strengthening a little bit. Crude oil coming down will again give it a boost, and of course to the economy. And earnings visibility will drive the markets as we go forward from here on. I think it will be prudent to look at sectors which are predominantly driven by domestic triggers rather than looking at sectors which are dependent on global factors, especially related to tariff. If you have elevated risk appetite, then there will be a bargain hunting in all those sectors which are dependent on global news flows, especially with respect to the tariff front. If not, then I think if you have a lower risk appetite, look at FMCG, look at banking, look at cement, look at capital goods, defense, power. These are some of the sectors which are relatively isolated or relatively insulated from the external shocks. Of course, they will correct, but they will correct it less compared to the sectors which are dependent on the international news flows. We believe that this range will possibly hold out. We believe that 25,400 should hold out on closing basis, and if that is the case, then higher side possibility is definitely going to be witnessed. And as and when we have a little bit of more clarity on the tariff related trade deal announced by the government of India, I think the market should see a little bit of more strength coming in. We always give investment ideas, friends. Before I give those investment ideas, I think it's prudent to give a disclosure that whatever recommendations that we are giving out on the fundamental side are from our research team on the long-term basis. Our company Geojit or I do not have any personal investments, nor do we have any financial interest, nor there is any kind of conflict of interest, but we give regular advice to our clients. They might have their investment position in the stocks that are going to be recommended. So two investment ideas, friends. One is from the aviation pack, the strongest company in the aviation pack, Interglobe Aviation. I think this company has defied all laws of gravity. Despite the stake sale from Gangwal family, despite the headwind in terms of higher crude oil prices when crude went to $80 a barrel, despite the fact that there has been selling from the FIs, this stock has inching higher and higher after a given period of time. We believe that connectivity is improving under the government policy of Udan 1 and Udan 2. We have more regional connectivity coming up. We have two large airports coming up, friends. One in Navi Mumbai, possibly by another month or two, you should see the operational side kicking off for the Navi Mumbai airport in Mumbai, and the second one in NCR Gurgaon Jewar airport, and along with that a lot of other regional connectivity. So we expect this stock to do well. New aircrafts are joining the fleet. Occupancy is very decent. Realization per seat is very decent. And of course, aviation turbine fuel has not gone up given the kind of volatility in the crude oil prices. And in fact, it could come down. This would add as an added advantage to aviation sector, especially for a company like Interglobe Aviation, that is Indigo. The second one is from a small to mid cap IT company, KPIT Technologies. Though it is a sector which is influenced by the tariff policies, slowdown in US, or any kind of inflation going up in US, or discretionary spend getting cuts, but we believe that it's a contra call for those who have a little bit of a high risk appetite. Company has delivered good earnings despite the headwinds in the IT sector, and we believe that after this headwinds are in the rear view mirror, companies like KPIT Tech could deliver good earning visibility and of course return on investment. So the second investment idea is KPIT Technologies. Mind you, friends, since the markets is choppy, volatile on fallback of trade related and global news flows, start at current levels, and as and when you get dips in the market, you should gradually add on to this. But purely this is long-term investment idea. This is not BTST. This is not 3 months, 6 months, or 9 months, 1 year. That is 12 months, 18 months, 24 months plus kind of investment ideas. So have that kind of a time horizon and start at current levels and gradually add on dips. Thank you very much for your patience hearing. I'll see you again next week on Monday. Till then, please do take care of yourself. Bye-bye.